Hello and welcome. We are going to talk about one of the most consequential sectors in the Indian economy. India's growth is not just driven by but also supported by its consumption sector. And it is our vast 1.4 billion strong population which is the reason for this. This population has been undergoing economic upliftment for the last 3.5 decades, and experts suggest that it will continue for the next few decades as well. Recent data shows that private consumption in India has grown at a growth rate of 7.2% over the last 10-12 years, which is stronger than seen in many large economies like US and China. Along with this growth rate are the changing dynamics of the consumption sector, homegrown brands showcased and making a mark, along with the large companies, supply chains smoothing out, inflation easing. These are all putting the spotlight on the consumption sector. Invesco Mutual Fund is launching its consumption fund, and I am speaking to Manish Poddar, who is going to manage this scheme. Manish heads the research team at Invesco Mutual Fund and has been covering consumer markets for the last 15 years. Let's get right into it and understand why they have chosen to come out with the NFO now and what it brings to table for investors. Hi Manish, so excited to talk to you about the consumption fund. Manish, headlines are abound with how consumption in India is slowing. The government too has given a direct tax nudge to spending, and now with GST reductions and indirect tax boost as well. But at the same time, we keep reading about the demographic advantage in India and how consumption is well supported. Can you explain the two sides of this complex consumption coin?
If you look at consumers in India, they are dynamic with shifting preferences given rising income and proliferation of media. In my opinion, urban consumer wallet share are shifting in India and not shrinking. For instance, a mobile phone player in India now clocks sales more than a 100-year-old FMCG company. Similarly, last year a music concert of an Indian artist did approximately $75 million in revenue as per media articles. So consumers in urban India are ready to spend on categories where they find relevance. However, when one looks at broader India, consumption has been in the slow lane for the past 2 years, given pent-up purchase during COVID and broad-based economic slowdown. The government had also been doing supply-side measures like PLI across sectors in the last few years, but now have done several measures such as income tax cuts and GST reforms. Alongside, RBI has also cut interest rate. So at a broader level, incrementally the rate of change for the sector will start improving.
So what kind of spending would you categorize as being consumption?
So if you look at the consumption fund, it is more than consumer staples. So it includes FMCG, which is 28% of the index, autos is another 25%, consumer services, which is broken up into 4 sub-segments, namely consumer retail, consumer durables, internet names, and leisure or travel related names. This segment forms about 15% of the index. Healthcare is another 5% of the index, while telecom, power, real estate form the remaining 25% of the index. So the index is a play on a lot of structural themes of India.
Now, how is the operating landscape different for a consumer company operating in India versus the global landscape?
For a consumer company operating in India, they need to understand the 4 C's of country, consumer, channel, and competition. Copy-paste of global models doesn't work in India. For instance, when a FMCG company launched its breakfast cereal in India, it didn't sail through as we Indians wanted hot breakfast. This fund will invest in companies which can operate in such a complex marketplace.
We spoke about changing dynamics of the consumption sector. So, in your opinion, what are some of the notable changes in consumption patterns?
So, roti, kapda and makan have become baseline for consumption in India. With GDP per household increasing, Indians will consume more, consume better and consume well over the next 3, 5 or 10 years. So when you look at consumer habits, they've changed multifold. For instance, we had a pair of shoes for all occasions. But now our kids have multiple pair of shoes, namely for school, play area and different occasions. Frequency of consumption has also increased. For instance, people now don't want to repeat the clothes they purchase as they have to upload their image on social media platforms like Instagram. This is the changing landscape of consumers in India, and companies need to keep adopting to this layout.
Manish, for the next decade or so, what are the foreseeable drivers of domestic consumption?
So when you think about what is fueling consumption, other than the income and population cohort, there are 5 variables which are aiding the mother theme of consumption, namely urbanization, formalization, financialization, digitalization. Now you can see, compare, purchase anything from a pen to a house online. And 5th is the women earning power of India, which is aiding the overall household disposable income.
We must also acknowledge that incomes are rising in the affluent segments of society and perhaps feeding into discretionary spending. Which consumption sectors does this trend impact and how?
Consumers are incrementally purchasing premium products across both staple and discretionary categories. For instance, in the FMCG segment, consumer earlier used to use detergent bars. They are now moved to detergent powder and are incrementally shifting now their preference towards liquid detergents. Also, when you look at the mobility segment, consumers have migrated from hatchbacks to sedans to now SUVs.
Also, when you drive through the country in tier 2, tier 3 towns, there as well, there is a rising culture of going to the mall. Sure, the size of the outlet may differ and the brands may differ, but this seems like a certain shift towards higher discretionary spending. Would you agree?
Lisa, I would agree to that. Consumption is actually becoming broad-based, with tier 2 and tier 3 cities being the new engines of growth. For instance, when we interact with some of the QSR companies, they do allude that sales per square feet in some cities is similar to the sales per square feet in metro stores. During the larger sales events of e-commerce companies also, they allude about 50% of their orders being from these micro markets. So incrementally, the lines between India and Bharat are blurring.
Manish, we end up talking a lot about urban consumption. What are the trends you are seeing in rural consumptions and are they similar?
So during COVID, the overall rural growth had tapered, given household spending more on healthcare. But however, when looks at the FMCG growth in the last 2 years, rural is actually outpacing urban growth by a percentage point. With steady rainfall and remittances from family members working in the urban spec, rural market should aid the overall growth profile for the sector.
Now that we have spoken about the contours of the consumption sector, let's come to the fund. What is the investment style of the fund?
So this fund will invest in companies across market cap. If you look at the model portfolio, it has 25 to 30 companies, which are largely a play on the structural opportunities in India. The fund will have active allocations and will be overweight or underweight on the names we prefer versus the benchmark, similar to the investment style being followed in our growth schemes till date. Given that we believe in the underlying consumption story, which we alluded to, the fund will be true to its mandate and not invest in banks, industrials, and cement names. The fund could have a tilt towards discretionary names, as we believe with household incomes increasing, consumers will incrementally spend more on such categories and will gradually prefer premium product offerings.
Okay, so that was the style. What is the investment opportunity that you are looking for?
So the framework for investing in any consumer company is overarching on the promoter's mindset and what interventions the promoter is doing to deploy capital on the existing business and gradually increase the overall TAM by foraying into new products or new markets and deploying resources or people to capitalize on the opportunity. When we look at any consumer company, they fall into 4 buckets. First one, big companies which can drive growth via penetration. Second, being companies which will drive usage growth. Third, will be companies which fall under the category which drive consumers to premium products. And fourth are companies which foray into new categories or adjacencies, organically or inorganically. For instance, there's a luggage brand that has 4 channels of distribution, of which in the MBO network it reaches 4,000 outlets versus 12,000 outlets MBA outlet universe. And it has 200 EBOs versus 1500 EBOs for other retail categories. So the room for penetration is significant for this company. Despite it being the largest brand in India and clocking approximately 20% sales CAGR over FY19 to 25, their market share is still in early double digits of the luggage category. And 45% of the category is still unorganized. So the room for growth is immense for such names. They are also incrementally doubling down on their premium offering to upgrade its existing consumers, and alongside focusing into segments like backpacks from luggage, which is another growth area. Likewise, some companies capitalize on the adjacent segments organically or inorganically. For instance, a food delivery company acquired a quick commerce player to capture the opportunity of value migration of consumers to convenience products. So in our opinion, there are multiple opportunities in the consumer landscape of India. And when one looks at their market cap in comparison to the market opportunity, many of these consumer stories have just started. For instance, GMV for one of the quick commerce companies in India is estimated to be approximately $7 billion in FY26. And when you compare it to the $700 billion addressable TAM, which is growing in India, its market share is barely 1% compared to the market opportunity.
Also on the macro front, data today is very supportive of an increasing consumption trend. What are some of the risks you see to this hypothesis?
So when we look at any sector or stock internally, there are 2 variables which keep coming to the grid. First, is there an impact of tariff on the thesis? And second, is there any external stimulus to the sector? Consumption fits this space from these 2 variables. Basis what is announced by the government or the RBI and likely announcement of the 8th Pay Commission in the next 12 months, consumption could get a boost of approximately 6,75,000 crore as per our internal estimates, which is approximately 1.75% of GDP. Given demand for this space is local and structural, there are no material risks to the consumption thesis of India. However, stock selection is critical to make the most of the opportunity at hand.
Lastly, Manish, should one have a holding time frame for consumption-linked stocks, or does it appear to be a perennial, long-term investment given the entire demographic advantage in India?
India is the largest market of the world in terms of population, and consumption is the largest theme of India. Given the external stimuli, in my opinion, this is the good time to play the great India consumption story structurally.
Thank you so much, Manish, for taking the time out and sharing your thoughts about the upcoming fund and the consumption sector. All the very best for the NFO.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.